One tax expert has long advocated for a risk-based, computer-assisted audit to replace the flawed manual system of the Internal Revenue Service, which often targets the same businesses while allowing major tax evaders, smugglers, and corrupt politicians to slip through. Instead of weaponizing tax laws against MSMEs and foreign investors, this reform aims to shift the focus to real financial crimes. To discuss this and the latest tax controversies, we are joined by Mon Abrea, Chairman and CEO of the Asian Consulting Group. Mon, welcome back to the show, and thank you so much for making time for us. We appreciate it.
Thank you, Rain, after your news. Another news, yes.
Yes. You had been actually reacting offline to something that we talked about with the BCCP. But first, before we let you go, last month you said that you were just about to walk into a meeting with the BIR and the PEZA. Has there been any update on that meeting, especially on tax reform?
Well, we are happy to share that we will have a joint investment mission with PEZA, the Philippine Economic Zone Authority. This is to really attract more foreign investors. But you know, the mandate of BIR is really serious, and nobody will really be happy if BIR is knocking on your door. But their mandate is to audit, to collect more taxes. That's why the recommendation is not actually a personal recommendation, but a World Bank's recommendation long time ago. And I'm just resurfacing it since most of our foreign investors find BIR's intervention quite costly. So risk-based is something that has been there, and maybe it's time for us to look into it.
And you deal with clients not just here in the Philippines, but also abroad. So you're familiar with how much of the world has probably migrated to an automated BIR system. So the tax assessment is automatic.
Correct.
You don't have to negotiate or haggle.
It's hard to hide income, in short. Unlike in the Philippines, you know, it's easy to hide income and just let BIR chase you.
So in this case, if the BIR actually did a full automation and all tax assessments are computerized, what would it mean for the Philippines? Would it actually mean that we increase our tax collections, or it would be decreased?
No, dramatically it will increase. Honestly, 10 years ago, Rain, I was estimating that probably what we are collecting around, at that time, it's less than 1 trillion. 10 years ago, I was thinking maybe we should be collecting 10 trillion, 10 years ago. And that's how much tax exposure or gap I can see in our tax system. That BIR is not able to collect simply because they're doing it manually. There's a bank secrecy that doesn't allow them to actually access the bank accounts of the richest and the most powerful in our country. And this discourages foreign investors. When they know that there's corruption, that tax evaders and smugglers are not prosecuted in a country where they will put their money, then they would have second thoughts. Why will I risk my money if I can invest elsewhere where it is more transparent and the government is more accountable?
But the tax leakages, you know, are not just coming from the graft and corruption happening at our tax collection agencies, but this pushback against an automated system isn't just coming from the BIR or the BOC. It's also coming from the taxpayers, the big companies. Why is that?
Of course, if it will be automated, then it will now be difficult for an individual, whether you are the middle class or the top 1% richest Filipinos or individual in the country, it will be hard for you to hide your income. And even if you bring it to Panama or to any of these tax havens, it will be monitored because your bank accounts can be accessed. So this automation is a threat not just for the unscrupulous and corrupt examiners, but also for the real tax evaders, smugglers, money launderers, those who are enjoying all these loopholes in our tax system. So honestly, this will benefit BIR. This will help their tax administration to become more efficient, considering that 97% of our collection is based on voluntary. Imagine we are relying on whatever they want to declare, whatever Rain and Mon will declare. And it's up to BIR to chase us who among us is honest or not.
And we were talking with the BCCP, and some of the BPOs apparently are feeling singled out by this run after tax evaders program or any particular program that puts the heat on certain companies. Do you feel that there are certain companies or industries being singled out by the BIR?
Well, honestly, it's the feeling of every taxpayer being audited by BIR. Secondly, those who are bribing are the favorites. So if you are bribing examiners, therefore every year they would really spot or look after you, because they know they will get something. But at the end of the day, I don't think that BIR is really just really chasing after you. But the thing is, under this manual random audit, they're practically they end up auditing the same companies, and that's bad because it's very costly to be audited by BIR. Other than the fact that you have to hire consultants, it will interrupt your operations, and that's a lost revenue for any company that will be subject to audit.
And therefore, Mon, what would be a good solution for this? Or maybe even a win-win solution? Is it time to employ AI, not just automate the tax assessment system?
Well, as recommended by World Bank, I think the risk-based audit is really a very good and palatable solution to all these loopholes or lapses in our tax system. The use of technology, AI may be, but again, right now we don't even do data sharing. Like, how come Pogos operated without paying taxes? They are approved, they have business permit from LGU, but they are not filing and paying any taxes to BIR, because they don't share data. So I think data sharing domestically and with OECD globally, then that will give BIR upper hand to really chase after the big tax evaders rather than running after MSMEs who can barely make $1 billion or even 10 million, and yet they are being audited every year. So I think it's win-win for everyone: more tax collections, less cost or burden for MSMEs, and foreign investors will be delighted to invest in the Philippines because they know if they're compliant, BIR will not be chasing after them. Unlike now, as what you have mentioned, the BPOs are reacting. Why are we getting all these assessments? Because it's manual. The default of BIR is to disallow whatever they don't find at par with the standard. So the burden of proof now lies on the taxpayer. Again, that's costly. You need to prove yourself like a criminal that you are not guilty of tax evasion.
You pointed out foreign investments, foreign investors. We have Create More. We have, tax reform in process, probably not complete yet, but in process. We also have the Ease of Paying Taxes Act. Haven't these media or legislation or policies made traction yet in encouraging investment here in the Philippines?
Well, the good thing, Rain, is that we keep moving forward, that we never stop. We continue to improve. That's why we have Create More. And if you ask me, have they made already an impact? I think just letting the world know that we have legislated improvements or amendments to our existing tax incentives policies is already a sign that the Philippines is really ready to welcome foreign investments. With the RBE taxpayer service, we hope that our foreign investors will no longer be frightened or be interrupted by BIR audit, because it will really be a healthy relationship. Not that they are non-compliant, but they will be assisted in case there will be non-compliance. And with the ease of paying taxes, it's definitely for our MSMEs that they won't feel burdened that they have to pay huge penalties for any delay. It's practically a 50% cut or discount. So it's a huge relief for our MSMEs. But more than that, it's really, again, automating the system. So if you are to ask me what should the President, the Secretary should be doing if we really want more foreign investment, allocate a huge budget for this digital transformation of the BIR. Because it's not that they don't want it. They need funds to make sure it will happen, and it will really smoothen up the processes.
And which is unfortunate considering the United States had actually been funding that particular transition as well. But the BIR did mention that they are going to seek further funding for that initiative. Meanwhile, the businessman who is the friend to all businessmen, Donald Trump, he proposed the Ending Income Tax, Keeping Retirement Savings Act. Is that, it's a tax model shifting to consumption-based taxation. Is that something that would work with us?
Well, honestly, even for the U.S., it's a bit scary because it might be a dangerous path, considering that the U.S. relied or collected $3 trillion in income tax. So are they willing to forego it when their importation goods is around $3 million as well? Which means they need to impose 100% tariff to cover or to collect what they will give up in terms of income tax collection. While for the Philippines, it's a no-brainer. We can't go to that path. We can't even explore that, primarily because we are so much reliant on importation, especially of essential goods. So we don't even impose tariff. So if we impose tariff, then there will be more deficit. There will be more shortages in our rice, in our fuel, and whatever essential goods that our kababayans or Filipinos would have to need to survive. So I think relying on consumer tax is an ideal in principle, but we need to make sure that we can really collect as much taxes compared right now. Because right now, 60% of our collection is still based on income tax.
Shifting gears a little bit more, Mon, of course, transition credits being used. You mentioned fuel already. Transition credits being used in Asia to accelerate the move from coal to renewable energy or clean energy. Should the Philippines consider integrating such mechanisms in our tax policies to support sustainable development?
Definitely, Rain. It's something that we should include in a blueprint that we should that the government should be looking at in terms of sustainability and climate action. Especially that we are a very vulnerable country to all this natural disasters. So we need to make sure that we incentivize businesses, and this transition credit can be either used as a tax deduction, a tax credit, or a offsetting mechanism by which they don't need to pay additional taxes. So definitely, it's a welcome idea for businesses and for foreign investors. But again, it should be part of a big plan, not just a piecemeal. Otherwise, we might end up amending or introducing new policies every now and then.
And of course, all these questions and the big picture, of course, will be available at the International Tax and Investment Conference near the end of the month here in Manila.
Yes.
Can you tell us more about that?
The reason why I'm in Manila. So we have the 2025 International Tax and Investment Conference with all the policymakers, the business leaders, and of course, our influencers who are making a lot of difference in terms of their sustainability and climate initiatives. So here we will not just talk about tax policies, but we will talk about the initiatives of different industry leaders on fashion, film, arts. We have AI, food and agriculture, then of course sustainable cities and communities, and the last, travel and tourism. We also have secretaries and other cabinet members who will be participating in a very important discussion. Again, this is not something that will happen or that we can achieve overnight, but it's an important discussion that we'll all have to be part of, especially if it involves tax policy.
I'm actually interested in the updates from the senior economists from the World Bank, and I would really appreciate getting insights from there so far. Mon Abrea, Chairman and CEO of the Asian Consulting Group, always a pleasure to have you, and thank you so much for sharing with us your insights and updates. Thank you. And as we've discussed, moving towards a smarter, risk-based audit system could create a fairer, more transparent tax environment while focusing enforcement on real financial crimes.